Welcome to Momentum Monday. Today is April 13, 2025. Howard, do you have any idea what's going on with the tariffs?
No, but no, I don't. What do you know? Who have you talked to inside the White House?
Nobody, I don't know anybody. I don't have any special connections. It seems like they don't even know what's going on and
Yeah, but if we
what's.
took all the news away, what do we see here?
Well, if we took all the news away, we last week we saw a test of the 2021 highs, where let's see monthly. Right here, you can see of the test of the 2021 highs and then a big bounce, which kind of, it happened before that tariff pause announcement, like basically
Hmm.
on Monday. Monday was pre-market was the low.
Yeah,
So we saw that big technical bounce that we expected, and we talked about it last week that 400 is a big area of potential support for the Qs. It's still above its rising 50 months moving average. And even in the 2022, the last big bear market, that's about the level where buyers stepped in. So typically, when you have a big secular bull market, cyclical bear markets tend to find support, near those levels. But when you have something like 2008, 2001 to 2003, then you have much bigger sell-offs, that could be, 50% for the indices. So far, we're still within,
yeah.
uh,
I think I think it's the only chart you need this week, right? Like it's just you can go through a few trades out there, but there's not much to add here, right? If you didn't have the news, which is the way I tried to treat it last week when we chatted, is like you have to add some exposure. You have to do the opposite when the VIX is 50. So if you just had this chart and no news and someone showed it to you, on this time frame, you would say, Jesus, can't believe we sold off that fast. And you would, if you weren't allowed to see the news, you would have done some nibbling last week. And so now you know, now you have something to trade against, right? Now you can look up the news and go, Jesus, get myself caught up. And I'm like, make yourself nervous. Don't make yourself nervous till you've got the bounce. Now, if you want to panic, much better time to panic, right? But if we take the zoom back out again,
yeah, this is daily.
go back to the zoom out, and then I'll let you finish up. It's like, okay, so you put on the buy. If we're going to go into a severe bear market, we have some frame of reference, right? That went to do with leverage and the financial crisis and banks going out of business. We're not there, right? So I'd be very surprised if we took out the lows last week, but I'm also prepared for that, right? Like, what are you willing to do? Apple was 170, I think, at some point last week, and tonight it's 210, right? With no change in the news, like Trump says the tariff's still on. So you've had a 20% bounce. Your time to reassess things would be now. Are you scared about Apple, right? You're only 15% off the all-time highs. You take some risk off the table. And going back to the cues on the monthly item, going back to that, you would say, okay, now I have some lines in the sand. If we start taking out the lows, Apple 170, QQQs, breaks below the lows of last week, you have to reevaluate at least everything that you put on this week, right? But in the meantime, try and ignore the news and start focusing on a list of what's working. Unfortunately, what's working is gold, which isn't necessarily a growth indication, more of an indication of fear. Goldman came out today with like a $4,500 price target. I don't know when the last time they talked about gold, but we've been talking about it for a year. Um, so it's not like I'd rush out to buy it on Goldman's recommendation. And if anything, if I were to believe anything about this administration, it's free to cheat. Goldman's creating liquidity to sell you some of their gold that they've been
Yeah,
accumulating.
if anything, you should be selling on that
Yeah.
headline. Yeah.
So again, gold will tell you more on the next steep pullback. We'll know a lot more about gold on the next steep pullback, not this breakaway. So really where you want to be focused on going back to the cues on the monthly is like, what were the prices on Monday last week when fear, the VIX hit 60? And that's kind of, at least you have some kind of base, right? To measure how you felt. If you want to take the pain off, if you had too much exposure, tomorrow's a much better day to like take some risk off and reevaluate. So that's about it. I'm not even looking at anything new.
Yeah,
Right.
futures are
Go
up
ahead.
about 1%, and I think we might see some resistance here near the declining 20-day, and if the indices continue higher, I would, the next levels will be the declining 50, the declining 200-day. We're in a bear market, still in a correction. So all of those bounces are still likely to find some resistance near those major technical levels.
Yeah.
And I don't really think that that will change until we actually see a major deal with China or the Federal Reserve just step up and just flood the system with liquidity and start buying bonds. Because what we saw last week wasn't just about stocks, testing the indices testing their 2021 highs and just giving back all of their 2024 gains. It was also about the spike in rates.
Yeah.
So typically when there is a sell-off in equities, money often hides in US treasuries, which are the perceived area of safety. But this didn't happen this time. The only thing that went up was gold. So gold has remained the one only standing safe haven. So definitely we're seeing major changes in the way money managers hedge and protect and allocate capital. Obviously, you cannot really make big conclusions just based on just a few weeks, but we're seeing that. Um, so this is just not an ordinary correction, I think.
Yeah.
And to
Good
your
take.
point, yes, gold and gold miners are basically the main momentum spots, momentum areas right now. They're going up, and even they pulled back a little bit when there was that forced liquidation late the
Last
previous
week.
week when people had to sell because they were forced. I mean, most likely
Yeah.
funds, not
Yeah.
people. And then,
The
but it was the
panic
first
was
one.
the panic ended Monday or Tuesday. It can reaccelerate is what I need, meaning Apple at 210 is a lot better than Apple 170. So I
Yeah,
will sell some tomorrow morning if we, up here. Meaning Apple at 250, I can back anything between now and the 260 is noise. Right? A lot has to go right for Apple to get back to all-time highs. It's not growing very fast. You've had your warning. There was no reason to really kind of care what the
it bounced exactly at its 50,
as it
50
should.
month. Yeah.
And so if we remain in a bull market, Apple will heal. It will go sideways for a while. It doesn't really have the growth. And the story is AI, and Apple's not delivered on AI. So it's not like the stock should run away from you. And if it does, your other stocks will go up. So if we pull up Apple on the daily, it's like, yeah, I've been in it forever, but I have a hard time believing with what we're seeing, you know, even though Tim's probably doing everything right behind the scenes, is we're in this period where we're going to get out of FANG and into some kind of value companies. So I'll free up, like everybody else, I think, with huge money, will free up cash here, right? This is like a T-bill. So, but above 250, I mean, there will be a lot of stuff going right. Or this will be a hell of a bounce if there's no news. So I got to think we'll see sellers all the way up now here to all-time highs. And I don't want to get caught is missing what's happening underneath the surface. Right now, it's too early to tell, right? You have dollar going down,
Yeah.
rates going up, stocks going down. Not a great environment um, to, unless you're a true professional trader, to like speculate. Other than, putting some money to work in an index with the VIX where it was last week. I don't have any great ideas. How are you playing it then? With me,
So, I mean, I'm playing it short term, because the volatility is so extreme, the ranges are so extreme during the day that, the opportunities that I see intraday are just incredible. Like we're seeing 10x moves in short-term options intraday, like in both directions, both puts and calls. So in terms of just opportunities for short-term speculation, this is a great tape. But anything longer than that, even for swing trading is a bit more challenging just because of the frequent changes in direction, the frequent changes in White House, in the messages from White House regarding tariffs. And, they have big impact on the market, as we saw last week when we had like that 11% move in one day. So
yeah.
short-term great opportunities. Swing and position trading a little bit more difficult to really define your risk with those huge ranges.
Uh-huh.
Um, and now that the forced liquidation is out of the way, at least for the time being, we're definitely seeing some sectors starting to show relative strength for people that might want to put.
Which ones?
So, I mean, obviously, I was going to mention, other than gold and gold miners, which were the first one to make 52-week highs after that correction, the other sector is global defense. And look at this
Oh,
ETF
right, right.
yield, among the first one to make new 52-week highs last week after the correction. And this one has a lot of the European military
Oh, it does
companies.
it. So what's the ticker?
Yes,
I gotta add that. What's the ticker?
SHLD. So
Hmm.
I posted it on stock tweets. I think it was like on Thursday, and I
Yeah,
mentioned. I mean, they also have like a bunch of US companies like Palantir and and NOC, like all the big ones. But they also have a lot of European um, military companies, and most of them have doubled or more year to date. Those European companies, as Europe is investing more money to update their armies e- equipment and stuff.
yeah.
So definitely one of the sectors alongside gold that is showing strength. And then the third sector is group of stocks. It's mostly defensive, consumer defensive stocks like grocery
Hmm.
stores that, typically you see those types of stocks outperform during recessions as
Yeah,
people dine out less often and just but you still have to eat, so you go and buy stuff at the grocery store. But also during inflation, because they can raise prices faster than their cost is rising.
yeah,
So this is why we're seeing companies like Sprouts, Costco, and others, BJ, in the space showing relative strength. They're not growth stocks by any means,
yeah.
but
But understand these will pull back if they
yes,
resist.
definitely.
So people should understand this is just more to tell people like for someone who's just want to trade in a positive trend during this kind of pullback. Not that, I mean, I got to think even food would be affected if we get into a recession and we get into inflation. So again, I think you're just pointing out like, if you want to trade positive trends, here's where it's at. But like, if we revert back to some kind of like everything's off, and I don't think that's going to happen with Trump. I think he's been pretty clear that this is a protectionist government and whatever they know, they seem to know best. And we've given them the power to do that. And that's why I think what defense is the closest thing to a gross sector
Pretty much the only
that he could
really
get
area.
behind, right?
Yeah.
Like you just put
Yeah.
$1 trillion to work on the deficit with it. I mean, on defense spending, right? So again, they're not interested in saving money. They're interested in lining the pockets of, and the family's going to be making defense investments for the next 4 years, right? The Trump family. So they're going to be on every cap table that you can imagine. Um, that the grift is on, they're going to be on every cap table. So that's a good find. Obviously, we're a little You're not the first one into this thing, people, so just be careful. This is going.
Yeah, as I said, it owns a lot of the European military stocks that have already doubled year to date. So,
Yeah. But on
uh,
pullbacks, it'll be interesting to see
yeah,
how. So again, so it's more interesting to follow these relative strength leaders and pullbacks. See how they behave, right? Don't chase them. Um, but at the same time, yeah, I mean, we this is messy. This is a big, these volatility explosions lead to humongous trend changes.
yeah,
And in the case of defense, just a continuation of like a trend that's been going on for a year with Palantir. Um, um, okay. All right. I don't want to overthink it.
yeah.
How did you do
Just
last
one.
week? How'd you do last week? Did you put some money to work for
Yeah,
your
on
boy?
Monday I bought the S&P, more of the S&P for my son's account,
Yeah.
and I traded it. So I had a great week. I wanted
Yeah.
to mention one more thing that I read today. I don't know if it's true, that 80% of the sales on Amazon are products from China. And if those tariffs stay, we're talking about tens of thousands of small businesses and mid-sized businesses that um, might disappear pretty much. Or
But not in defense of that, but I think it's the same thing when the market had all these small SOS bandits and traders in the 90s. Some of these businesses, same thing with Shopify arbitrage
yeah,
with when Shopify blew up the first time in 3, 4 years ago or a couple of years ago, right? With the ending of the arbitrage with Alibaba, right? All these small stores, right? So you can complain all you want, but like it's up to small businesses to kind of figure out the right trends to be in. The relying on China, um, I don't know like what's right or wrong, but there's been warnings that this wasn't going to last, right? And some people couldn't get out of the way of the tsunami. If you're making, I have a couple companies. If you're making a product, like for example, Manscaped, and you're, you've built your brand and you don't have the capacity to switch fast enough. And there's a lot of interesting little tech businesses that relying on a product from China. They could be out of business, right? There's just no time to fix the supply chain for a small business, or even a large, medium to large size business. But that's an interesting point about Amazon. I doubt it's 80%, but it could be. I mean, that's a staggering number. But I know that like Home Depot, like if you're going to go build a home, so we were looking at upgrading our home by then, and you can the construction like the material costs of what you went to Home Depot for are going to be everything you buy in Home Depot to do a remodel is coming from another country for the most part. So that's a massive industry. Contractors, people upgrading and, moving their homes that, the input costs of like doing a remodel could be 30, 40, 50, 100% higher.
yeah, I heard about 26%. It would cost 26% more to build a house if the tariffs
Wow.
stay.
Okay. Well, there you see it. So the good news is the market held. The weird thing is that Trump's talking about the bond market, which is, I don't know if I believe he even understands it. It's the first time he's ever talked about the bond market, probably in history, right? But he was just spouting off about it and squiggly lines and people were wheezy, right? Like now he notices. Like I don't understand this.
Well,
Like,
probably his advisors are mentioning that to him that it's
yeah, but
important.
I'm just saying, like, of course the bond market. Like if you're talking about hammering the brakes on growth, the first thing you'd want to check is what's going to happen in the bond market. So it seems like I don't know if he really understands this because otherwise this whole thing wouldn't have been started. So I worry about that, but who knows? There's greater forces at play. But I imagine as little as I know about the bond market, it's probably more than Trump. So I worry about that, and then I worry about the U.S. dollar, right? Like people are showing a lack of
Yeah,
faith.
it's already down 10% year
Yeah.
to date, right?
Yeah.
And since I'm planning a trip this year to Europe, I'm not very happy about it, but it
Not
is what
happy
it is.
about it. And then the travel to the United States, I mean, its early numbers is
Yeah,
way down.
it dropped a lot, yeah.
Yeah. So again,
Which
demand
maybe
for
it'll
US
change
dollar.
with the cheap dollar, it will change.
Yeah. Now again, there's probably some benefits to the weak dollar. It's just the speed of descent that can fuck things up. So again, this is a very complicated moment in time. And I would urge people to zoom back out, go pull up the S&P on the monthly. In times like this, sometimes you just have to trust and turn off the news and just kind of trust prices and your own risk management and, zoom out and go, if we're heading into a 2008, you you need to be on the lookout, right? You've gotten the warning that there's a contagion potential out there.
Yeah, there's no rush.
No
If
rush.
you're a long-term investor or if you're just like to time the markets, yeah, like look at what happens in 2022. Like you had multiple
That was
months
brutal.
of
I'm just
building,
kind of remembering that and how brutal I felt. That was pretty brutal.
but there were multiple months of building a new base here, and you could have waited, until the middle of 2023 to participate, and you could have
Yeah.
still done well. In the same in 2008, 2009, you could have waited a
Yeah.
few months for a new base to build and then participate here.
Yeah.
You
No,
don't need to
if you
catch.
didn't put the trade on, you missed it. Now there's an opportunity to wait for strength and for true leaders to emerge. It won't just be defense and gold. If we're going to go into another bull market, it's not going
Yeah.
to be just those two sectors. And these
It might be though
politics,
months, I would say at least several months before we see another bull market in the best case scenario.
yeah, good advice.
All right, Howard, thank you. And see you
All right,
next
everybody,
week, I
have a good
guess.
weekend. See you.
You too.